Hello, everybody, and welcome to Afternoon Market Action. My name is Glenn.
My name is Patrick.
And we will be your host for the next 45 minutes or so as we go through some things that are going on in the market. We'll have some stock picks for you to keep your eyes on, whether bullish or bearish. Interesting market, definitely an interesting market in what's going on. Big swings to the upside, then back down to the downside, and it seems to be very news-driven. Yesterday, the PPI number, and then today, a missile fell in Poland, and just listening to news about it, seems like it wasn't a Russian missile. It was an air defense missile from Ukraine that fell, and everybody was getting ready to go to DEFCON 1, and hell was about to pop off, but it didn't happen. Glad about that. But there's a lot of stories about stocks, whether bullish or bearish, that we'll talk about as well. If you can hear us, by all means, folks, type in the room. Let us know, preferably with VV Nation. Let us know that we are coming across loud and clear. And I love that we do have a reach all around the globe. People from all over the world tune in for Afternoon Market Action. And we'll be both on live stream tomorrow. We'll talk a little bit more about that later on in the presentation. So thank you all for being here. I appreciate it. Patrick appreciates it. We all appreciate it. You guys are what makes our channel what it is, and we totally appreciate it. And there it is. Eton is here from Israel. Love that. Love that we have the global reach. That is so important. So with that, Patrick, any insight before we get started? What's your feel on the market?
I think we may be seeing signs that we saw from back in March and April once again. So it's going to be an interesting next few days to see how the market really starts to play out from here.
All right. Couple of good videos came out this week. Patrick did a really good video about how to take advantage of the PPI, which came out yesterday, gave you two different directions to go. And I think got you guys well prepared for no matter what happened. And then the second video came out last night talking about if the inflation is peaked. So we're trying to put out videos that are pertinent to the current market's conditions so that you have a one-stop place to get real information, not just talk, not just blah, 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 all that kind of stuff. We work hard to provide you with the content that makes it worth it for you to come back here. Jeff says, "Hoorah, Glenn and Patrick." Jeff in the house from Delaware. Hoorah to that. As we all know, last Thursday, was the Marine Corps birthday. As you all know, I am a former Marine, not an ex-Marine, but a former Marine. So thank you for that. And then right after that was Veterans Day for all the people who have served and who are veterans. So I'm a veteran as well as too. I guess that alert didn't hit still, did it? It didn't go. All right. It's all good. So especially because our alert didn't seem like it went out, this is a time in the day that I need you guys to actually share the live stream today. I did put out the alert, but for some reason it didn't hit out to the people that it normally does. We need to get some people in the room. The regular people will eventually make their way here, but today is a definite need for you to share this link with people in your social circles. That alert, usually goes out and we get a lot more people in the room, but for some reason it was broken today. Joey and I weren't able to get it set up to do that. Will whoever flushed the market this morning please jiggle the handle? Oh, you mean like this? Oh, it didn't play. Did it play? It didn't play? Oh, okay. Well, I guess I pushed the toilet sound, but we'll see. We'll see what happens. All right. Let's get into what's going on in the market. Do I need to push anything? Okay. Let's get into what's going on in the market. This is the market. I usually get the alert about 15 minutes after you start. For some reason, it didn't seem to go out. We couldn't get the alert to work. We were trying. Something is up with the alerting system. If you look at our color guard right now, a lot of yellow. A lot of yellow in the color guard, which we still advocate caution right now. Primary wave is up, still in a confirmed down call. All of the major indices are down today, with the NASDAQ leading the charge, down pushing 1.5% after the market was looking up yesterday. So there's a lot of news pushing the market back and forth, back and forth. Does chip stocks get smashed? I've got a couple of chip stocks that I'm looking at on my list today that I think warrant at least some attention. So we'll see. How often does VectorVest is updated when it comes to ratings like buy, sell, or hold? Every single day. Those are updated every single day. And actually, if you have real-time data, they are updated throughout the day. All right, they are updated throughout the day, but it's not just at the end of the day or specific times. As they warrant and meet the characteristics to be buy, hold, or sell recommendations, it is updated all throughout the day. The alert appeared in my list 11:57 Mountain Standard Time, but for some reason it didn't pop up on screen. Yeah, I'm not sure what happened in regards to that. But I can't see. Okay. Joey is working on that, Patrick. I don't know what.
All right.
I don't know what happened. I don't know. I don't know if it was the headphones today. Something.
You may need to just get rid of me and then add me back, I think.
No.
I may need to go away for a second.
No, Joey will make it happen however he needs to make it happen.
Joey will make me disappear.
Wow, a lot of people. Energy says, what's up, Glenn, Patrick, Joey? All right. What's up, Energy? So as we look at the homepage, none of the industries, look at the top sectors and industries, nothing is in the green today. All right. From the top industries and sectors, today is not a good day. And the video that I did yesterday was a conversational video about has inflation peaked, and whether it has or has not. I think Patrick and I have both been on the same boat that long term, I think that there's a lot more downside to happen. And all of the bulls out there are looking for whatever news that they can get to push the market higher. CPI number is better. The PPI number is better. And I think that the bulls are jumping on board with that and trying to make a market run. Do you guys agree with that commentary? Type a 1 in the room if you agree with that commentary, that the bulls are just looking for whatever they can to make the market happen and move up. And put a 2 if you think that this is just the market doing what it does. I think that the overall feel, based on the inflation, based on the rising interest rates, the market is still got more downside. It's got more downside. Now, John says the DEW is long. Follow the system. Absolutely. So am I telling you not to buy stuff? The answer to that question is no. If the market is giving you the opportunity to buy stocks, by all means, take it. By all means, take it. Patrick, you agree, disagree?
Agree.
Okay.
I'm just now getting them back in, so I have no idea what the question was.
The question was that for the long term, the market still has some downside.
Oh, yeah.
But if the market is
agree.
giving you opportunities to buy now, take the opportunities. That was the question.
I mean, yeah, there's always going to be some bear market rallies, just like there's some, sell-offs in bull markets. So I think that's what we're experiencing right now, is a bear market rally. Who knows how long it's going to last, but I wouldn't be calling it a brand new uptrend starting quite yet.
All right. So now I'm going to ride that into what John's question is about the DEW is long. Eton says the GLBRT kicker is his signal. And the VectorVest signals are there for your usage. If they are giving you up calls, if you're trading the system, trading a market timing call, then you trade it. All I'm saying, and I think that Patrick and I are both in agreement, that long term, just be careful. All right. I like that. Dan says centralized exchanges should be treated like a public restroom. Get in, do your business, get out, and try not to touch anything. I think that's a sort of kind of a good analogy a little bit. I do like that. That's I think where we are, where we need to be. Get in, get that money, get out. And I still think, huh? All right.
Well, the centralized exchange is talking about crypto.
No, I'm not talking about crypto.
Well, that's what he's talking about with centralized exchanges.
Okay. Is that what you're talking about? Centralized exchanges, Dan? Because if that's the
Yeah,
case, I'm not
because
talking about crypto.
you don't
I,
call a regular broker a centralized exchange. It's just a crypto exchange is the centralized exchange. Then you have
I'm
decentralized
not feeling
exchanges.
crypto and haven't been for a long time. Crypto winter, the whole 9 yards, FTX, all of that stuff. Crypto is, in my opinion, still not a good place to be. But there's going to be a lot of people out there that says, well, crypto's taking a big hit. This may be the time where crypto is going to be on sale. Well, that's up to you. All right, that's totally up to you. Guys, take a look at Steve Chappell's presentation using the timing system, going long and short for the past 3 years. Wonderful gains. Steve did a he didn't do the strategy of the week this week. I don't remember who did, but from a market timing perspective, we have done more than enough presentations to show you that market timing does work. Market timing. So yeah, Dan was talking about centralized exchanges, talk about crypto. I'm not on the crypto bandwagon at all.
So just to quickly talk about that, because I mean, there's so much news going on about it right now that I didn't really know which story to even talk about to even bring it up. But basically, what's going on for anybody that's not familiar with the situation, if you recall, what was it, back in the 1920s, 1930s, where they had bank runs where everybody ran to the bank trying to pull all their money out? That's what's going on right now, except just in crypto exchanges. So you're having random people on social media start saying, oh, I think everybody should start pulling their money from XYZ exchange. And then everybody starts to go do withdrawals from there. And it's the exact same thing that happened. It just basically seems to be a planned, orchestrated attack that's going on right now that's allowing regulators to have a reason to come in and step in and say, hey, they need regulation just like the banks. That's really the key takeaways from all that's going on right now.
Okay. And I got nothing to add to it. I got nothing to take away from it, but I got nothing to add to it. So I think it's a tough spot to be in right now. A lot of people have lost a lot of money in the crypto space, but then you're going to find a lot of people have said they've made a lot of money in the crypto space. So there we go. All right. Tell you what we're going to do. Let's start getting into some of the news stories that we have. Boom. I guess my story is the first story. Board of Governors, the Federal Reserve System. I like this website. I've been looking at a lot of stuff from this website. This was an October 21 story, 21st, about a month ago. Excess savings during COVID pandemic. It talks about, where I've been asking the question for the longest time is if people are not going back to work or they're being choosy about what jobs they want to take, how are they living? And it looks like a lot of money. U.S. households accumulated about $2.3 trillion in 2020 and through the summer of 2021, above and beyond what they would have saved in income, and spending components had grown at a recent pre-pandemic trend. Since late last year, households have decumulated about 1/4 of these excessive earnings and have a saving rate drop below the pre-pandemic trend. Why? Because all of the money that they got because of stimulus, they spent it, and now it's almost all gone, if not close to being gone, which is going to take me into one of Patrick's stories. And it's interesting with all of the jobs that are still out there, because even though I still believe that we're in a recession, with all of the jobs that are out there, a lot of people don't want these jobs because they're service jobs, or these are jobs that they're not able to work from home for, and all of that kind of thing. So I still wonder how long they can continue to be without jobs. So that's the story with all of the money that has been distributed out, and spending and spending and spending until you can't spend it anymore. And then this is Patrick's story. Go ahead, Patrick. U.S. household debt. Go ahead.
So yeah, U.S. household debt jumps from 16.5 trillion, or jumps to 16.5 trillion, increase of 8.3%, the fastest since 2008. Basically, we've been talking about this for quite a while. Americans are continuing to be able to afford their daily necessities because they're putting it all on credit cards and they're just racking up debt, just like banks, just like the government has done for the last decade. And, this just kind of hits home a little bit more because we're now, what, 9 months or 11 months into the year, and we're still seeing people continuing to excessively spend on things that they could probably cut back on, but they don't. We haven't been in that mindset for a while. So we're continuing to see people just spend money left, right, and center without, having to cut back on their personal lifestyles. And that's continuing to fuel things even more. I did also add a Fed article or Fed data set here to go along with this article. So here we have the large banks, consumer credit card, and mortgage data from the Fed. So the Federal Reserve from St. Louis Fed. This is their data set that the government goes off of, the Fed goes off of. And as we can see here, credit card balances from the large banks or their customers at large banks, we saw them get, everybody was paying their credit cards off when they got all that free money back in 2000 during the COVID crash. Nobody was spending, so spending obviously went down. But now we are right back to where we were realistically right before everything started going into shutdowns. Now, this isn't surprising. I was surprised that we're not at a new high at this point based off this data set. But then we come down into credit card balances, accounts with credit line increases, and we can see the overall trend. It's exploded off of those lows from March of 2020. Everybody's increasing their credit lines. Hopefully they have the money to be able to cover that. If credit cards are increasing their credit lines, that means they have good credit, but that's a quick and easy way for people to lose their good credit is by getting overextended, and the credit card companies allow that by increasing their credit lines. But then the one data set that I found most interesting, not really surprising, but just to see it visually was definitely interesting. And that is mortgage origination. So new mortgages, large banks taking on new mortgages or setting up new mortgages. No surprise, we're seeing the drastic sell-off or drastic decline since the Fed continues to increase rates. Still not getting close to those levels that we were after, the March lows or the COVID crash, but we're definitely heading that way, getting back into more normalized territory down here between the, 100 or 80 to 120 new mortgage originations at a time. So we're still well above the average historical norms, at least for over the last 10 years or so. So the housing market's been a little bit more resilient than I thought it would, but this is definitely showing where people are going to save or where people are cutting back on. They're obviously not refinancing or, taking out a new mortgage on a home. What they're doing is just simply, staying in put right now and loading up on their credit cards currently, which could have some pretty disastrous effects if they can't repay back all these or all that money that they're borrowing from their credit card companies.
Hold on. Current rate of foreclosures. Question came up is anyone know what the foreclosure rate is at?
It's probably on here. If I spent some time looking through it, I could probably find it.
No, I'm just. What is the current rate of foreclosures? Dang it! Not forever stamps. Foreclosures.
Man, for some reason, YouTube is having some troubles today because I can't even, or my chat isn't even updating. I'm having to refresh the page every time to try to see new comments coming in.
All right. The current rate of foreclosures. The foreclosure rate of the U.S. is 1 in every 12,000 housing starts. That's not what I'm looking for. 0.47%. In 2000, that's 2018. Good question. I want to see. 2018 was about 0.5%. The start of 2022, 19, 20. Wow. And the rising trend shows no sign of slowing down. February 2022 saw a 129% increase from February of 2021.
Well, one thing that you have to keep in mind, though, the government gave everybody a pass and did not have anybody get foreclosed on for what, like a year, 2 years or so?
Yeah, about a year.
So there's a lot of built up pressure from that when they finally took away that backstop. So the numbers are going to be elevated regardless because of that backstop alone.
Well, I'm just looking at even from that perspective. Well, there's a different perspective of people getting into homes that's dropping, but you got a point there that it was stopped for a minute. Man, this story is interesting. But that's a big jump. That's a big jump. That's crazy, Ramor. That was a good question. But Patrick puts a good spin on it that it's probably going to be more explosive due to, what happens to these houses that people got reprieved on? They still have to pay that money back, right, Patrick? They just added to the end of the loan from what I understand.
So I've never got a clear answer from that. I saw back and forth of everything saying that banks were saying that they had to pay it once they stopped that program. So that would have put it all up front right then and there. I've also heard that they added it onto the back of the loan, kind of like they do commercial loans.
That would make more sense because I'm not trying to pay it all up front.
But a lot of people were really worried because of that wasn't explained up front. That was explained a couple of months after people already started taking that program.
Okay.
So I haven't ever been able to find a 100% concrete answer to that, which way they decided to go. I'm assuming because a lot of people still have their homes, that they just tacked it onto the end like commercial loans. But I don't know for 100% certainty that is the full case.
Dan, look up a depression. I think that a lot of people are starting to get into that whole depression mode. Ain't none of us has lived through a depression. All right, go talk to your grandparents. All right, I don't think there's anybody in this room. I could be mistaken. I don't think there's anybody in this room that's lived through a depression. I don't think you know what a depression is, Dan. If you're thinking that it sounds like a depression. Do you still know that interest rates, even though they're going up, are still historically low? All right, this ain't a depression.
Well, let's put that little asterisk next to that as well, though.
Okay. I don't think we're anywhere near. I don't think we're anywhere near a depression at all.
Interest rates are historically low, but then again, we've never had the Fed's never had this kind of balance sheet issue that they had, and all throughout history since the Fed has been created. So they kind of have to keep it low if our government's going to work properly and we're going to still be able to fund things. So that's where things get really interesting. Is this will be the first time we've ever seen the Fed increasing rates, even to these levels, which are historically low, but when you take into account the amount that the government and the Fed has on its balance sheets, it puts a whole different scenario into perspective.
So do you think we're heading for a depression?
I mean, you guys, you know my thoughts. I've responded back. I've stated it before. I think, yeah. Unless somehow the Fed miraculously turns things around, which I don't see happening. I mean, we're going into uncharted territory, and the Fed has never been able to successfully navigate any slowdown in the economy. So,
I'm with Ramor. I think that the Fed still has the tools to keep that from happening. The one part of my video from yesterday was the Fed is going to hurt the economy, but are they going to break the economy? And there's a difference between the two.
So what's the tools that they have? to print more
They can
money and
still
lower
get.
rates, and then all of a
They
sudden
can
we're back
still.
into hyperinflation talks?
You can still get rid of the stuff that you do have on the books. Get that stuff off the books. Stop carrying as much as you are. And you know something, with the economy running as hot as it was and not taking action when they should have, I think we the economy are paying the price. And if you pause or if you start to lower interest rates, have we fixed inflation? So, yeah. Does this hurt? Yes. Do we hurt more? Yes. But does the economy break? Therein lies the question. I don't think the economy breaks.
They have to break it if they're going to get to where they want to be.
I don't think they have to break it. I think that it's going to cause it the harm, the pain, but I don't think they have to break it.
They most certainly will break it. I guarantee you that.
All right. Well, then I guess that leaves it to be seen. How about that? I guess it leaves it to be seen. So we'll see. What's your thoughts about BRICS? What is BRICS Nation? I don't know what that is. America has been in a depression since 1980s, and the money printing is not helping. I don't know.
BRICS is Brazil, Russia, India, China, and a few other countries, but it's they're set up. They're trying to try to rival the U.S. dollar and the Western countries, basically.
The thing is that if we go through a depression, then I think everybody goes through a depression, because we're now a global economy. It's not us just by ourselves or China just by themselves. We are a global economy. And I think that if any one of the big three, and I'll put Russia in there, go into a depression, that affects the other big two that are still left. I don't think that any of that happens. I think, and I don't know what this looks like, I think that we go through a global reset because everybody's printing money. And I don't know what a global reset looks like. I don't know what a global reset looks like. So, interesting.
Yeah. What's going to be interesting is what prevails after that reset and how
that's going to be interesting
after the reset.
The outcome afterwards is going to be very interesting, and I don't know what that looks like either.
Agreed.
I don't know what that looks like either. Once the Fed raises next 50 basis points, Fed realizes it takes time for its hikes to take effect. Economy will improve. As soon as the Fed pauses or only raises 50 basis points, the market takes off. There's no ifs, ands, or buts about it. But if the Fed does that, Robert, and inflation falls just a little bit more but starts to run rampant again, then what? Then the Fed's got to restart this all over again. So I don't think we can do a 50 basis points just quite yet. All right. What is the definition of reset? I think that all of the money reset. In my mind, I'm thinking about reset because at these rates, who can pay off the interest on $37 trillion? Or in China's spot, or in Russia's spot. Everybody's printing money. How does any civilized major government pay back the interest rates on all of the money that's printed?
Well, so that's why people were bringing up the BRICS earlier, because what they're doing is they're trying to create their own currency and that basically their own SWIFT system to sidestep the U.S. SWIFT system to do all their business transactions through, and all the BRICS countries' currency, if you will, would be backed by gold. So they've been stocking gold for about the last decade or so. And that's what they're planning on doing, is basically going back to the gold standard and having everything in their economies backed by a gold standard.
What is BRICS?
We just talked about this. The Brazil, Russia, India, China, South Africa, and a few other countries are mixed in there now. But it's basically a group of countries that are getting together that are forming kind of like Europe. It's a group of countries that form a union. This is a group of countries that are forming a union to basically take on the U.S. hegemony we have across the globe head on and be able to take business from the U.S. So like Saudi Arabia, for example, the U.S. Biden is going after Saudi Arabia to try to drop oil prices. Well, Saudi Arabia doesn't like that. So who are they going to talk to? Russia. What is Russia doing? Russia's the main party really pushing, and China's the main party pushing the whole BRICS economy, BRICS system to get off the U.S. economic system that's taken over the world. So yeah, that's why it's scary for this reset to say what's more popular, what happens afterwards. Well, who would they look for? Something that's backed by gold or something that is backed by hopes and dreams of the U.S. economy?
And the main thinking there on paper would be that people are going to go with the currency that's backed by something tangible like gold.
Exactly.
Interesting. There it is, Roger. Thank you. Brazil, Russia, India, China, South Africa. Headquarters is in Shanghai, China from Google. Thank you very much for that. So I want to do some research on that.
It's been going on for about a decade. They've been stating that they were going to make this whole thing to take on U.S. dominance across the globe. It still hasn't amounted to anything, but I mean, it's been 10 years now at least. And I mean, they're definitely getting closer, but they've been stating this for a decade now and still nothing has materialized. So,
but this could be a catalyst, what we're going through right now.
But there's a lot of ifs and a lot of things that have to fall into place perfectly for something like that to actually happen.
Interesting. See, I learned something. We're going back to shekels. Yep, I got a shekel. I got a shekel. It's going to be worth a lot of money. Yeah. Right, Joey? It's going to be worth a lot of money. All right. You ain't got no shekels. I'm finna come take your shekels. All right. Couple of stories, and you know something? I'm not quite sure how I feel about retail, but Walmart tops earnings estimates, what it means for Target. Target got smoked. And then my other story on retail, Home Depot earnings top estimates, customers are resilient, CFO says. Now, the whole story about retail is you're going to have some. Yeah, we're going to have more like shackles more than shekels. I hear you. That will lead to a weak dollar, says Ravi. That whole BRICS thing will lead to a decimated dollar, as a matter of fact. I'm not sure how I feel about retail. Some companies are going to hit, some companies are not going to hit. But Patrick's been talking about it a while that we're probably going to have retail get hit, especially going into the holiday season. I think officially the holiday season is on its way because Thanksgiving is next week. So we're officially in the pre-stages of the holiday season. And I think looking at the earnings on the major retailers are going to give a glimpse as to how potent or non-potent retail is going to be in the holiday season. And they're already talking about it may not be as good as it has been.
Well, we had retail sales reported this morning as well. And they came in higher than expected, 1.3% versus the 1% expected.
I still am not sure how I feel about this. The data says one thing, and emotions or sentiment or feelings shouldn't be part of it. But I think the common senseality, and that's not a Glennism, it would be osity, but I think the common senseality of it says that with the rising interest rates, companies are going to have a hard time making the bottom line in the black.
So this headline needs to be corrected. It should say Home Depot's earnings top estimates, customers' credit cards are resilient, CFO says.
I'm with you on that. I'm with you on that. Big time. It's gonna come to roost at some point in time. The people are spending on their credit cards, as the story just showed. It's going up. It's going up, going up. And you know something? Even me, my credit's not great, but my credit is decent. And everybody and their mother wants to offer me another credit card or give me an increase on my current credit.
Yep.
Everybody. Why? It's because they want to stay in your pockets. They need to get that money. They need to get that interest. They're trying to stay in your pockets. So revenue will go down. Net earnings may stabilize for some companies. And as you can see, some companies are beating, some companies are not. But when they don't, it takes a big hit on the market. When they don't. When they do, it's like, hey, okay, yeah. So that's just something. Retail is a space, even though I got 2 retail stocks, retail is a space that I'm not 100% on board with, but I'm looking at the stories, and the stories could push the stock's price higher.
Well, so let me ask you this, Glenn.
Yeah.
So data shows that people are still buying stuff and customers are still resilient, as they say. Maybe Target is there's more to it than just people are stopping shopping at Target. Maybe it's poor management, maybe some bad calls like we talked about 6 months ago, where they were already ordering too much because of supply chain issues. They were trying to get as much as they could to keep their shelves stocked, and then they over ordered and now they have too much inventory on hand. Could it possibly be that? Does anybody want to talk about the poor management that has led to that decision for them? Or is it just because consumers are apparently not spending, even though data out there shows otherwise?
So you think that because not every retailer has beat earnings.
Yep.
Walmart did, Home Depot did. What about Lowe's? What about Macy's? So all of the ones that may be missing, is you thinking that it could be because of poor management?
We talked about this at the very beginning of the year, where, I called it that you're going to see all these companies or all these, retailers out there that couldn't stock their shelves on time, couldn't keep things on inventory. They were trying to do whatever they could to get things in, to keep their stores or their shelves stocked. And they got to that point where they overshot, and now they have too much inventory on hand, just like what happened in 2007, 2008. I talked about the auto industry. Everybody bought cars right before there, so the auto industry was like, "Oh, we're amazing, we're the best, our numbers are great." But then nobody goes and buys a new car every 6 months to a year. So what happened? Everybody already had new cars. They continued to produce like everybody was going to continue to buy a new car every other month. And then all of a sudden they had way too much inventory available. And next thing you know, they were begging people to take cars off the lot. Same situation is going on here.
Home Depot, you're thinking that Walmart and the Home Depot didn't do that?
I think they may have better management teams and be able to have more control, more real-time control of their inventory, so they were able to adjust more appropriately. That seems to be the big difference. Whether they want to say it's the customer or whatever, that really seems to be something that's not talked about, but that seems to be that deciding factor of whether or not these companies are doing well during earnings season or whether they're not. It's not about people going out and buying, because people still have to go out and buy stuff. There's a lot of stuff that you can buy at Target that you can't for cheaper than going to some smaller places that you can't buy at like Aldi's or these discount stores. So people are still going to go to Target, but and anytime you go to a Target, they're still packed. There's still people constantly shopping in there. The lines are still long. It's not about people going in and buying stuff. It's about that they had to start taking discounts on stuff that they overstocked up on, and they don't want to admit it.
So Walmart sells considerably more than Target.
Agreed.
Okay, but they beat earnings in nicely. So I sit back, I go to both stores. Target is nowhere near as crowded, especially in Mooresville, nowhere near as crowded as Walmart. Nowhere. And no matter when I go in the store.
Yeah, I don't really go to Walmart anymore.
I go to Walmart more so than I go to Target. And Walmart is always full. And I go to People Watch as well. But Walmart is always considerably more packed than Target. But Target missed, and that was a big pull on the market to the downside. Because it's a big store. And it's, management could be a part of it, but I think that they're all in the same boat. When they had the problem with inventory, that they all had a problem with inventory. And did they overshoot? I think that they all overshot to get the shelves stocked, because Walmart didn't want to be behind the 8 ball behind Target so that people would go to Target, and the same vice versa. So I don't know if some sat back and said, well, maybe we don't order as much. They didn't know how long the issue was going to be with getting product into the door. So I think that they all overshot to get product into the door. So I'll take that as possibly, but I don't know.
But you can overshoot, then you can
unless I can
grossly
see some
overshoot.
stats on that. I don't know if I can go with that totally yet.
Well, you remember the last two earnings reports. You had Target coming out stating that they had grossly overshot, that they were having to put out huge sections of discounted stuff just to get it off their shelves. And then that last earnings report said we're close to almost getting it all gone, but there's still a little bit left. It shouldn't be that big of an issue next quarter. Well, here's that next quarter, and they still have way too much. So that's what I'm saying. It's nobody's bringing it up, nobody's talking about it, but maybe management, maybe that's something you need to keep in mind when looking for good wholesome stocks in this current market is, good management teams.
Understood. All right, I got you. So those were two retail stocks that I kept my eyes on. Here's another story. This comes from The Street. I think this is from The Street. I don't know where this is from.
Real
whatever
money,
it's
not fake money, not monopoly
Huh?
money, real money.
I don't know if is that this anyway. Bulls have the edge short term, but the long-term economic picture stays gloomy. I think that this came out today, that this story was right on track with what Patrick and I have been saying for a long time. Ravi, good time to enter DRV REITs. Patrick did a video on that on Monday talking about some of those kinds of stocks. Again, it was a great video that he did on Monday talking about how to take advantage of the data. All right, so that was just a story just to back up a lot of what Patrick and I were saying. What did David says? My wife, Days Walmart has been out of stock on many items. So interesting. From the standpoint of the argument that Patrick put up, is that why Walmart hits? Maybe they didn't overshoot. Maybe that backs up your story some more, Patrick.
I mean, they could have overshot, but maybe they didn't overshoot as nearly to the levels in the extremes that Lowe's had, or Target has. So I'm not saying that they didn't overshoot. I'm not saying other people didn't overshoot. I'm just saying maybe with the management team, they didn't manage it properly and they overshot way more than they really should have. That's all I'm saying.
I got you. All right. Apple. I love Apple. Apple plans to source chips from Arizona plant. Who is that? ASML? TSM? In Arizona, report open in 2024. I think that whole chips bill, it's going to take a long time for the manufacturing to come back to the U.S., but Apple is looking at getting their chips outside of going to China or doing them themselves with bringing it back into the country. And then there's another one that and what comes from that space, Lockheed Martin, Microsoft announced landmark agreement on classified cloud advanced technologies for the Department of Defense. Patrick has talked about the defensive stocks to keep your eyes on. I still think that as this war goes on and we keep sending money to Ukraine, not that, I'm getting to the point that maybe enough is enough. We sent a lot of money and we just asked for another $37 billion, billion with a B, to be sent over to Ukraine to help. It's just tough. Apple is a stock to keep on the watch list. Apple opened a factory in India. That's another place getting it out of China, but we still need to get these factories, the chip building back onto stateside, the United States. So Apple brings more business to Vietnam. Good, bad, or indifferent. Listen, I think we need to still, no matter what, keep it out of China. So my Apple story and my Lockheed story, talking about from the technical side of the fence. There's another story. You didn't have any other stories, right, Patrick?
I don't think so.
All right. Here's a stock that everybody's still been talking about, Zim Integrated Shipping. Quarter three exceeded expectations. I'm going to tell you to keep your eyes on the shipping stocks, but a lot of them are starting to pull back. Keep your eyes. That's the last thing. And weed stocks. I keep getting a lot of inquiries about, is it time to buy weed stocks? Another state legalizes marijuana possession. This is in Kentucky. So I'm going to look at a marijuana stock, one of the best in the business, to take a look at as well. All right. So the Zim and the marijuana stocks are two stocks that a lot of people have been actually
Careful, you're
asking
going to
me
get
about.
us demonetized.
Why? I didn't say weed yet until now. All right, so it's all Joey's fault. Joey told me to put up this story.
You got to say Mary Jane. We got to talk about her.
Mary Jane.
There you go.
All right.
There you go. We talk about that nice lady, and we're
That
good.
nice lady, Mary Jane.
Yeah.
Okay.
She's
Look at
getting
that.
legalized all over the country.
Roger says, "Wow, Lowe's missed earnings bigly, but the stock price flying high." Again, that baffles me to a certain degree. If the stock missed, maybe it's pulling in on the Walmart and Home Depot. I don't know. Maybe people feel because of those two stocks hitting that, hey, it's okay. Lowe's missed, but they're okay. I don't know. All right. Last thing before we leave, Patrick and I look for a lot of news on stocks. You know, whether it's on his live stream, my live stream, or our live stream, we go through a lot of looking to find information on stocks. What I want to do is take you to our homepage, the VectorVest website. From here, go to www.vectorvest.com. And this is for people who are not subscribers to the software. If you want to see some of the stocks that we're looking at all over the place, go to our main website, go over to blogs. All right, put your mouse on blogs, and we're going to go down to hot stocks. Left click on hot stocks. And in our blog, we talk about a lot of different stocks that are coming up on the forefront. But we use the VectorVest software to analyze these things. So if you want to know what stocks are out there that are hot, that are making the news, I think that this is a good place to be able to do so. Again, go to www.vectorvest.com. All right, let's go back to the website one more time. All right, right from our website, put your mouse on blogs, go down to hot stocks. And it seems like every day, every other day or so, we put out a new news article, but we utilize the VectorVest software to analyze the stocks. Just like we do here on our live streams, we can give you a stock to keep your eyes on just about every day. But I think we need, you guys need to know where to go look at. If you thought that this was helpful to you, type a 1 in the room. All right? If you think that this was helpful to you, type a 1 in the room. This is a good place that we communicate to you what stocks are making the news and for what reasons. All right. So this blog page also gives a lot of different things about retirement, about swing trading, but we're here for you. And I think that, we got to point you to this. All right. We got to point you to this because every day you have a place to go to see what's new. What's the new something that VectorVest is talking about? And I think going forward, as I do my live streams, I may take a story from here and do a deeper dive on it in the live stream.
So
I wanted to bring that to your attention.
One other thing, I just noticed that comment from Dan a few moments ago talking about the Fed's really not moving forward with QT. Didn't we talk about that like a month or two ago where we talked about, I showed the article about how the balance sheet, when you actually looked at the Fed's balance sheet, they were removing pretty much everything, but they were increasing their mortgage-backed securities. Do you recall that?
I do.
So, and now we're seeing Dan talking about it. They've been trimming, but their balance sheet has actually increased. And that goes right along with what we've been stating for months now is that, yes, they're saying they're tightening, but what they're dumping is stocks. What they're continuing to increase their balance sheet with is more and more mortgage-backed securities. And with rising interest rates, with rising mortgage rates, that's going to be extremely interesting to see how this all ends up playing out, man.
And Patrick says that he breaks the economy. And I, on the other side, don't think that he breaks the economy. But I guess we'll see. We will see. I think that what Dan just said adds more fuel to that fire that he does break the economy.
Mm-hmm.
So we'll see. Is the Fed trying to manage the bond curve?
They could be trying to, but as we've seen, they haven't done a great job unless they go all out balls to the wall buying everything.
Say that.
What? Basketballs.
Oh. You throwing basketballs at the wall?
Yeah.
Oh, why would you do that?
Because that's how you teach kids. I'm going to be the new coach for Teddy's team, so I've got to start getting, basketball references in here.
Okay. Sonny says may not break but severely bent. I think that we get pushed and pushed and pushed. I just don't think that it breaks. I just don't think that it breaks. Roger says, "Nice save, Patrick. That was a nice save, bro. I ain't gonna lie. That was a nice save.
Appreciate that."
All right, let's go look at our picks for this week. Here's my new picks.
Wow, you got a lot of picks, man. You're real bullish on things right now, aren't you?
Oh, hold on. Just shush until I tell you the full story.
I'll sit back, relax, enjoy the show.
All right. Enjoy the talk show. All right. Mark, are you here? So 9 is an energy stock that a lot of people have been talking about as well. I'm going to talk about that in a second. Taiwan Semi. I still like the chip space. I still like the chip space, but we'll talk about that. Home Depot and Walmart are here because of the earnings. My weed stock that I'm thinking about
demonetized.
Huh? Oh, yeah.
Demonetized.
My Mary Jane stock that I'm talking about is Grow Generation. I'm going to right click and I want to view the industry graph because is it time to buy Mary Jane stocks? Let's go put this on a 3-month graph. All right. Is it time to buy these stocks yet? Sigh. It's taking forever to come up. It's Joey's fault. Say sorry, Joey. Why? I didn't do it. That's an ugly looking intraday graph. Put on a 3-month graph. What's it doing? It's going up. What don't I like about it? The big wicks at the top of these candles. These candles are wicky. They're like wicky. These are wicky candles. But I can't deny the fact that coming off a level of consolidation, the industry as a whole is running up. I can't deny that on this pullback, the 3 and the 8 never failed. It's still going up. It did get past a level of resistance of $1.42, pulled back below, but the 3 and the 8 are still in place. I'm looking at MACD. I'm looking at DPO. I'm not a big tech kind of guy, but I think it's important to see what's going on. I noticed that the DPO is leveling off. I know that the MACD is leveling off. So for the questions that come out, even though, in every election, Mary Jane stocks come up as, oh, who's going to legalize them, who's not going to legalize them, and then they run and they say, oh, man, we got to get into those stocks. I'm telling you, look at the wicks on these candles. A lot of selling pressure, even though it's moving up, just to be careful on that. All right, so that's to answer that question. Zim, I want to look at that industry graph because that's in the shipping industry, and these shipping stocks have gone up. I'm going to look at that industry graph real quick. Man, this is taking a long time to happen. Patrick, it takes a lot of balls to golf the way the balls to golf the way I do. I graph.
I responded back to that. You gonna read that too, Ron Burgundy?
No, I'm not now. All right. Interesting about transportation ship. I'm noticing that it's having a hard time butting up right against resistance. Be careful with the shipping stocks, whether it's Zim, whether it's TK, whether it's Safe Bulkers, all of those companies, they've run. They're having a hard time right now as an industry. Just be careful with it. Watch the 3 and the 8. Look at the convergence of the MACD. Look at the pullback of the DPO. Volume is still there, but just be careful with the shipping companies. So in this list, I think Lockheed Martin with that hookup with Microsoft. I'm not sure how bullish I am on any of these stocks, to be honest. These are stocks that have made news. I do like, all right, I'm going to call it. I'm going to be bullish on Taiwan Semi. I'm going to be bullish on Lockheed Martin.
Wait, so I got one question for you.
Yo.
Why grow instead of IIPR or Green Thumb or any of those?
Tell you why in a second. I pull up the industry. Where's Grow by way of VST?
Yeah, it has some of the highest momentum right now, but IIPR has
no,
better
I said by
fundamentals.
VST, not momentum, but by VST.
Yeah, because of RT. RV and RS
I
are
totally
still below
understand
1.
that. All right, so the answer to your question is if I'm going to look at a stock best of breed, I'm going to look at VST. If I want to look at short term, what's got the fastest, most momentum?
Look at the 3 indicators, Glenn, before you're making that comment.
I totally understand that, but
RT has the highest weighting in VST. So right now, Grow has the highest.
Dude, I've been here longer than you. Slow down. I picked by way of the overall combination. Thus and I know RT has the heaviest weighting. But if I'm looking for a combination all the way across, I wanted to use VST. I wanted to keep it simple.
So why not then SHWZ?
I didn't want it. I looked at the graph. I looked at the graph. I looked at the graphs of the top 5. I picked out GRWG. I cherry picked from the top 5.
Just wondering.
Right. No, that was nothing more, nothing less. I cherry picked from the top 5 looking at the graphs. All right. So that's why I went with the GRW. Gosh, you trying to put it to me like,
I'm just trying to get an honest answer.
And I gave you my honest answer was not because of RT, but I wanted the best combination of all 3. And I know that RT plays a heavy role on that. That was just my pick from going simple. All right. That's all. I hate you. I do. I so freaking hate you.
I love you, Glenn.
All right. So
I love you.
The only two that I like going forward, bullish for next week is going to be TSM and Lockheed Martin. All right. So I don't even want to look at any more of the graphs because I'm way past the time that we were supposed to be at. But those are my only 2 that I'm going bullish on. Let's go on your picks.
So I only put 2 in here.
I know. I didn't want to. You talk so damn much. You just talk.
Yeah. So basically, my whole approach this week, I was looking at a lot of different stocks. Everything I continue to look at seems to be overextended. I did DRV because the news that I talked about on Monday on our 6 p.m. video that we released, we got a lot of housing data the second half of this week. Mortgage rates continue to increase. Yeah, they're pulled back for short term for a week or 2, but for the foreseeable future throughout the remainder of this year, going into at least the first half of next year, we can expect to see interest rates continue to climb. Therefore, less and less people are going to be taking out new mortgages, new loans to buy new houses. DRV is a clear play. It's grossly oversold right now. It had a big drop off, but it's starting to come back. We see some bullish divergences with that. UVXY is an interesting one, more of a speculative trade, more based off the chart. Once again, I am more dedicated to charts than anything else because charts are the only thing that can't really lie. Data can be fudged. Charts don't. Charts go off of strictly price action. So UVXY is an interesting one just from a technical play. It's been going down for a while. I like it as a short-term trade, short-term vehicle for trading, especially in these crazy markets. So I have 3 graphs I want to show. So what I'm going to do is I'm going to graph all of these here. I'm going to bring this over so we can see them.
Before he graphs him, I'm going to tell him that these are 2 great picks going into the week. I'll let that be known.
Well, thank you.
I may hate you.
I thought you hated me, but thank you. I
may hate
that.
you, but I think that these are 2 great picks going into.
Holy cow! All right, so I'm gonna clear.
You can clear it.
So what I'm looking at here, this is the VectorVest composite, the VVC, over the 1-year time frame. Real quick, just demonstrating it. It's not going to be exact. I'm not going to get nitpicky and try to get exact numbers here. But as you can see, we tried to break out as of 3 or 4 days ago from this 1-year decline that we've been in here. Tried to break out, failed to do so, coming back down and retesting this as we speak. If we break down below this point, especially when you put on our 3 indicators, the RT, the BSR, and the MTI, as I stated at the very beginning of our session here today, this focus on the RT. You had MTI and the buy to sell ratio briefly break above 1. The RT never broke above 1. What do we see right now? The RT has not been able to break above 1, even though price is breaking out of this downtrend line or trying to break out, therefore not really confirming this breakout currently. Buy to sell ratio, MTI, broke above 1 just a couple of weeks ago, but RT has still been lagging just like we saw back here. This is why at the very beginning of our stream today, I made that comment just quickly or briefly about how this may be just another bear market rally, maybe one of the last bear market rallies we see before new lows start to really hit the market. Nobody knows exactly what's going to be that cause or the reasoning or the justification. Obviously, we leave that up to the bobbleheads that talk on TV. We just follow the charts. This is showing beforehand. In about a week or two, I expect to see the people on TV trying to justify it, trying to come out with reasonings to justify what the charts are showing right now. So going forward, these are my 2 picks based off of that analysis. DRV. DRV has been bloodied over the last few weeks. And then now we're starting to see a bullish divergence, which suggests that upside potential may outweigh downside risk. What I mean by that is if I remove support resistance, clear some of these lines out so make it easier for everybody. What we have right now, price clearly hitting a lower low. We look at RT, not really confirming that. We look at DPO hitting a higher low. We could add on stochastics. We had that bullish divergence once again. With new housing data coming out tomorrow, I believe, tomorrow morning, DRV, if you keep a tight stop on it, this could be, you have a lot of upside potential all the way back to those highs of around 80 or so at minimum. And then as a line in the sand or to minimize your loss quickly, you could put your line in the sand down here around, let's say, $49.50 to $50 or so. So you're giving yourself about a $2.50 or $2.25 loss potential, but with the expectations that it could possibly go up $10, $20, $30. So I like that risk to reward profile personally. So therefore, I like this trade, especially once that data comes out. Now, my next trade, strictly off of technicals, looking at UVXY. I've talked about this a while ago. You can see on a longer term basis, give me one moment here. On a longer term basis, we had UVXY continuing to move lower. We had this decline here that we talked about a few months ago. And then we had the bullish divergence. We saw MACD breaking out, gave us that run here. Now we're pulling back, retesting that downtrend line on MACD as a new support level. We haven't broken above, or we haven't broken below that. You can actually start to see consolidation. The MACD is slowing down. That histogram is getting smaller. If we add on stochastics, come on, add on stochastics. There we go. If we zoom in, let me take off the horizontal line real quick. Zoom in on a short-term basis. Price has been steadily moving lower. Looking at our stochastics, since the beginning of this month, stochastics have been steadily rising, and actually, well, as of this morning, we were breaking above that oversold condition above 20. Right now, percent K is right at that point. This may be a little early to call it, but given what we're looking at with the overall market, given what we're looking at going forward from a macro standpoint, I like the odds. Let's just put it that way. So, and once again, if you do decide to take this trade, it's all about risk management, especially for these short-term trades, especially leveraged ETFs just in general. You have your low down here around 886. You're currently trading around 9, so you have about 14 to 24% stop loss set in place, and you have a lot of upside potential still baked into this trade. So this is why I like both of these trades purely from a technical standpoint, and why I'm not really choosing any stocks today, because once again, the market looked like it was trying to break out from that long-term decline, but the RT is still struggling to really confirm that. And just like we saw earlier this year, we're seeing that similar situation happening now. So I'm staying cautious for the time being.
And even when it happened here and it did break above, look how quickly it came back down.
Well, look where the MTI and the buy to sell ratio hit at that point.
Yep.
Got on to the levels of being hit that downtrend line.
Oversold. Overbought.
Well,
absolutely.
Hold on. Where is it? There it is. On that day,
MTI I see it 1.68.
Hit right above 1.68. The only day it was above 1.6 by the end of the day, by the close. Then it sold off and moved lower. So it nailed it almost to the T there.
Absolutely.
I mean, this is why we say time and time again, keep your eye on the MTI.
Interesting that even with the run up, breaking above that trend line, we're very quickly coming back down. And the data is showing it. The data is showing. Are we still bullish on oil stocks? I still am, because we're getting into the cold months. I still am.
I'm going bearish on it now.
Okay.
I've been skeptical. I've been cautious, but I'm slowly becoming more and more bearish on oil now.
Understood. And so we'll see how that works out as well. I think oil bills are going to come due, and energy bills are going to come due, and people are going to crap their pants.
Recession seems to be the main driver of oil prices, more so than cold weather right now. That's my take.
I think 9 may have had its run in the stocks that I had in here. That's why I'm bearish on it. I brought it up because it's a stock that a lot of people are talking about it.
I talked about it yesterday as well. From a chart standpoint, you have a pretty strong support level that you can use as a line in the sand. Connect that.
Support or resistance?
It was support. Where was it? So no, it was further down. It was about like 960 or 9 somewhere around 960 or so.
I'm looking at this resistance level.
Well, that's going forward, yeah. But if you're looking at it, if you're in it now and you're wondering where you should put a line to stand at to keep yourself protected, then you got to look below the current price.
Actually, for me, I'm looking at if it closes below the 3. That's real close.
I think it was around 960. If you zoom out, there was a major support resistance zone. No, maybe am I wrong? Maybe it's further down that we last looked at. I don't know. But either way, there's, right around 950, 960 should be your maximum line to stand, in my opinion.
And my opinion on that is, because the 3 is so far away from the 8, I would use the 3. That's going to really lock in private. I wouldn't even wait for the 3 to cross below the 8. I would just use the 3. All of this time, it stayed above, with the exception of right here. All of this time, it stayed above, even on the pullback days, pullback day. I would use, if it closes below the 3, that's probably a good time to get out. That's definitely what I would. I like that, and Patrick's not wrong. If you got to a level of support somewhere around,
I would bring it to this consolidation we've been in the last 4 days, about 950. I'd put it even above that, where the closing price of that candle is.
Okay.
Because look, you've hit that once, twice, 3 times the last 3 days, and it's bounced off. So therefore, that tells us that level is pretty strong. If it breaks down and closes below that, then that's a pretty clear warning sign that something's changing.
And I think that if you use that in conjunction with breaking below the 3, closing below the 3, you'll get out even earlier than that. I'd like to see you take as much profit as you can on this. And that's why I like the 3. I don't want to use the 3 and the 8 because they're so far away from each other, but I think that Patrick's right. 940, 950 might not be a bad play to get out as well.
As a final line to stand, obviously less than that you can do, but no more than that, I'm saying.
Okay, I got you. All right, I'm done talking. You talked too much today, Patrick. You did. You stop.
Don't hate
Really
me because
not
I'm
enough.
beautiful.
Huh?
Huh?
Huh? What's
Let me
that?
say what?
Who's gonna? Joey says I'm gonna get beat up. I will beat the hell out of both of you at the same time. Hold on. And you told me you threw this away. I got my bat. Oh yeah, I got my bat. Bring it on.
Yeah,
And it goes to you, Patrick. Bring it on. I got you.
I mean,
I
I'll
got
just
my
outrun
little-
you for
what
5
is-
minutes, and then
This is my you better be good stick. That's what this is called. This is called my you better be good stick.
wow, I've heard that referred. This is kind of getting borderline, man. I'm not gonna lie. We may want to be careful right now.
All right, folks. Thank you for being here. Please sue Patrick's reference. Please sue Patrick's basketball reference. Sue it. What do you mean sue it? I think that was a good way he got around that. Throwing his basketballs against the wall. I think that was a great way to get out of that.
I mean, who doesn't slam their balls against the wall all the time?
Oh gosh.
On that one, I'm out.
Yeah,
I'm done
did
for
you
today.
Okay. I spent some time in that. All right. We're getting ready to go. Remember, Patrick is going to be on tomorrow at 11 o'clock with our mobile app. Always remember, folks, that if you are a subscriber to the VectorVest software, whether it's desktop, whether it's mobile, everyone's got access to the mobile. All right. So all of you who are on the desktop, you want to learn how to use the mobile while you're out and about, tune in tomorrow at 11 o'clock. He does the mobile app training every Thursday at 11. I will see you tomorrow at 2 o'clock for Trending Thursday here on our YouTube channel. Joey won't be here. All right. So Joey's going on a little bit of vacation.
Oh, wait, you're gonna be by
tell
yourself
Joey
tomorrow?
Have a safe vacation. It starts tomorrow. He'll be back Monday though.
You're gonna be doing your stream all by yourself tomorrow?
No, I think Clay is doing it. Clay's gonna be.
I was
back.
gonna say, that's gonna be scary.
Whatever. Actually, it would be scary, but you ain't gonna tell them that.
Oh, sorry,
gotta-
everybody. You guys
ain't
didn't
gonna-
hear that. That was just between Glenn and I.
Oh gosh. And Joey, have a good vacation, bro. All right. And we'll be on YouTube tomorrow. All right, I'm gonna sign off. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Still praying for those in Florida and Puerto Rico. Bon dia, salam, shalom, namaste. Yasu! Until next time, folks. See ya.
Toodles.